Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, and welcome to another Forex Market Preview video. This week I gave you a pretty intriguing title, 500 pips in 5 days, right? And I did that on purpose. That's because this week I wanted to attract a certain type of viewer. Typically, I try to stay away from these type of traders, the ones that have their mind set and locked in that trading is a get-rich-quick scheme, that it's so easy to find the magic system that can make them millions of pips with no hard work and no effort. No offense if you're one of those, but typically working with that type of trader is a waste of time, mainly because their mindset is so stuck in that way that they're going to ignore everything I have to say and go find someone that is promoting what they want to hear. However, this week I got a pretty interesting comment under one of my live trading blogs. For you guys that may be unfamiliar, or if you're just new, on my personal account, or if you're on the Trading Power page, just go underneath to the Akil Stokes playlist. I try to do a few live trading blogs a week, and I put them up on my account, and it's typically dealing with subjects that we deal with in a live room, or maybe questions that come up throughout the week on social media. Well, I did one this past week on basically dialing back your trading, understanding when it's not a good time to trade. And I got a pretty good comment from a trader. I think it's something that each and every one of you needs to hear. Either you've been in this situation before, or if you haven't, hopefully this will stop you from ever making this type of mistake. It's pretty powerful. So here we go. Akil, you couldn't have picked a better moment for me to talk about this subject. I really overtraded last week, and by doing so, I diminished great trading results from November. Main reason, I jumped in trades that didn't fully meet the rules of my trading plan because of the feeling that I'm missing out on trading opportunities. I would see a setup on, say, the 30-minute chart that should work, and I jump in emotionally, and then I stare at the chart trying to justify the trade rationally. Then, as price goes against me, I push back stops emotionally and look for a way to justify that decision rationally. It went through this support level, but it must bounce off the next. Then I double or triple position size emotionally and justify that decision rationally. Okay, I know at this point all rationality is gone. But saying, okay, now I don't need price to go back to the entry level for me to break even kind of justifies it. As the price goes against me further, I remove my stop order saying, okay, this is bad, but I don't need a stop order because the pair is at 10-year lows and it's oversold, which is visible on the monthly chart. And it must go back up. You see this trader's just digging himself into a deeper and deeper and deeper hole here. Meanwhile, let me see if there's anything interesting on some other pairs. Ooh, this should work. And I jump in a new trade setup that should work. And the worst thing happens, it does work. Price is going in my favor and I feel good about myself. So I'm looking for the next pair, for the next trading opportunity, and the next and the next and the next, because I don't want to miss out on any trading opportunities. Don't get me wrong, some of those trades were profitable, but the end result of such trading was negative 583 pips in 5 days. Ouch. Ouch indeed. And I'll tell you what, some of you guys are probably sitting there chuckling to yourself saying, oh, this guy's an idiot. How can he do that? But you'd be surprised at how many traders have been through something like this. I can honestly say that I have done every part of that statement. I've jumped into trades out of boredom or a certain feeling. I've moved stops out of fear. I've tried to make money back. I've hopped into other trades to make up for it. So it's not as far-fetched as you may think. It's actually a pretty common mistake, and that's why I want to share it with you. If you have made this mistake in the past, guess what? You're not alone. You're not a fool. You're a normal trader. This is part of the learning process, or I guess it can be part of the learning process. If you're someone that's new to trading, guess what? You need to write this quote down. You need to remember this, because if you can avoid this, you're going to save yourself a lot of time. You're going to save yourself potentially a lot of money as well during your trading journey. And emotions are key, guys. It's most traders fail not because they lack the skill of trading. It's trading psychology. It's dealing with those emotions. It's understanding what you should and shouldn't be doing in the market. And especially in trading, it's such a lonely world where it's typically us by ourselves and maybe a one friend that knows what the market is, stuck on an island. And when we're on that island, the mind starts to wander. So one of the best things I would say is if you're a trader and you feel yourself kind of stuck on that island, and when things get boring, emotions start taking over, find yourself a trading community. Right? Not a trading forum. Don't go on these trading forums. Those are full of filth. But find yourself a trading community. Find like-minded individuals that you can talk to about trading, have conversations about, maybe even run ideas past. And I'm talking about serious traders. You know, if you're looking for a great spot like that, check out one of our live trading rooms. We trade 3 hours a day in both of them, the London room and the New York room. And we have a brilliant community in there. I'll tell you what, I'm impressed each week as we get new members that come in for the 1 week free trial, just had how much they're welcomed and how much they say that they feel an impact just because of the community that supports them. So it may be worth checking out before the end of the year. Now, to get into the charts, this is what you guys want to see. We're going to take a look at the Euro Pound today. This is not a pair that's in my portfolio, but looking through the pairs that are in my portfolio, there's honestly not too much there. So want to take a look at this one. It's we'll do some technical analysis, but be careful out there this week, guys. Well, I'll talk a little bit about that later. All right, technical analysis time. I'm on the Euro Pound 4-hour chart. And today we're going to do something a little bit different. We're going to work backwards. Typically, I like to work from the higher time frames down, meaning I'll start on a daily chart, get a bird's eye view of what the market is doing, and then really dial down to the lower time frames to pinpoint that reason for entry. But today, we're going to start here on the 4-hour chart, and then we're going to take a look at the bigger picture on the daily. And before we get started, let's make this a little interactive. Can you see, let's see if you can anticipate what you think I'm going to show you here. Who has trained their RAS to see what I am seeing? Some of you may be saying Head and Shoulders. Some of you may be saying consolidation. I'll give you a clue. Advanced pattern formation, 2 of them, back to back. Does that help you out any? All right. What we're looking at here is a potential cipher formation, and we actually had back-to-back ones. If we take our X leg right up here, swing high to swing low, X to A to B. Oops, sorry, that's a different pattern formation. Let's do this, try it again. X to A, there we go, A to B to C, C to D right up here. You can see we just came off a bearish cipher formation. That was a nice little winner. Looks like target 1s and target 2s were achieved. And you see this a lot with the cipher formation more than any other one. And that's what's kind of cool about this pattern formation, is that it occurs so frequently in the market. It just provides a lot of opportunities, and you do need opportunities to make profit. Doesn't mean you should force those opportunities. Don't do what the trader did earlier in that message. Don't force opportunities, but we do need to have opportunities. Anyway, so after coming down to hit target 1s and target 2s, we've actually created a second cipher formation looking like this: X to A to B to C, and then a CD completion right down at 83.62. So this is something currently price closed this Friday at 83.91. So we're about 30 pips away from this potential entry here. So make sure you may want to check the markets on the open. For me personally, I live in the East Coast of the United States, so that's going to be 5 o'clock New York time. But make sure you check the opening of the markets to see if there's any gaps. You may get you may see price action push right down there. You may get a better entry. But we're close to completion on this. And you can see we're looking for initial targets up at the 84.42 level, with secondary targets being at the 84.92 level. Stops below the X leg, of course. And these marks on here, again, these are just kind of the traditional levels that we teach. You don't have to have your stop right here. I know I personally use a different stop for this formation. Some people may use different targets as well. These are just kind of a guideline to show you where they would be at for, I guess, the average trader, but you can certainly customize them to have them wherever you want. Speaking of that, so let's say you are a trader that wants to shoot for extended targets. Let's say you're not satisfied with a normal target 1 and normal target 2. You want to put on a third position, or maybe you just want to split your positions up differently and shoot for something bigger. The question you want to ask yourself is there any reason I should shoot for longer targets on this trade? Probably not, right? It looks like the market is either in consolidation or in a slight downtrend, actually more of a recent consolidation and a slight downtrend from earlier. How do I know, right? Because I've worked on my basics of reading a price chart, and I know how to identify new structure lows and outside returns, and new structure lows and outside returns, and new structure lows and outside returns, and all of that fun stuff. So why would I even entertain the thought of shooting for extended targets? What do you guys think? This is where bouncing out to the higher time frame comes in handy. So let's take a look at this on the daily chart. I'm going to go ahead and delete all of the junk I drew on, right? Actually, let's do this first before I delete the junk. We're going to do this. We're going to draw a straight line right on our cipher completion, right in here. Let's thicken that up some so you guys can see it. And then let's delete the advanced pattern formations that we drew on. Now, just looking at pure price action, what do you see right here, right? Look left, structure leaves clues, right? If you look at this line right here, and again, this is your cipher formation entry, this is the projected D point, we're coming in right at 2 previous DSR levels, DSR support levels. DSR are, it's an indicator that we use to give us a visual representation of support and resistance. So you can see the red boxes up here. These are resistance levels, and these are support levels. We call them dynamic support and resistance because they're dynamic to however you want to measure them. And you can see price action is coming right into a previous level of support, actually 2 previous DSR levels. Now, if I do one more step and I just scrunch up my chart even more, going after that bird's eye view, well, although on the 4-hour chart, it seemed as if we were on or in a bearish trend, right, a downtrend, when we take a look at the higher time frame, we will actually see that we are in what type of trend, guys? Outside return, new structure high. Outside return, new structure high, outside return. We're actually in a bullish trend here, right? And the shorter term downtrend that we identified just by looking at the 4-hour, right? Just by looking at this part of the market is no different than just an outside return in the bigger move. And this is why it's important to gain perspective. We see a lot of traders that don't really have a routine for how they trade. They try to shortcut the markets. They just come in and the first thing they see on the right hand of their screen, that's what they take. Oh yeah, downtrend, this. They never take the time to either go to a higher time frame or even scrunch up their charts and see what's happening with the bigger picture. And you know, when you do that, I guess when you don't do that, you're missing out on clues. And sometimes those clues can be the thing that keeps you out of a losing trade. Right? You take a bullish continuation trade when you think the market's bullish, you realize we're really bearish, and now you got skunked out and took a rip for no reason, right? Sometimes it also allows you to take, to get more bang for your buck with a trade. When you enter a bullish trade and, you know, you zoom out and realize that you're actually in a bullish trend, maybe you do something like we talked about earlier where you take extended targets and try to get a little bit more out of one of your contracts or something like that. So again, this small bearish trend, or what we thought was a bearish trend, or I guess what is a bearish trend on the lower time frame, is actually just an outside return on the higher time frame. So you can see price action is coming down. Momentum has slowed a little bit. We come off really a steep slope right here, and we start to really just mosey our way down. We come back into previous support looking left. For you guys that use the RSI, the Relative Strength Index, you can also see that the RSI is giving us bullish divergence, right? You can see the RSI down here pointing up, price action pointing down, so the market is losing steam as it comes into this support level. Those are all clues that you can use to really try to maximize your trade. So I thought this was a pretty cool example. Again, I don't personally trade this pair, but I do like going around different pairs. Some of my clients do, but I do like going around different pairs just to really keep my skill sharp on reading a price chart. 'Cause again, it doesn't, if you're training guys and you're working on how to read a price chart, just the skill of technical analysis, it doesn't matter what the pair is. It doesn't matter what the time frame is. All it matters is that you're putting in the reps necessary to get better and better and better each day in these markets. All right, so the week ahead, this is what everyone has been waiting for. Everyone is all year, really up to a year ago, we've been anticipating this rate hike for the dollar. In December, after the election, is supposed to be when it's going to happen. Now, the price is already priced into the market. That's typically how things go. When the market expects something, it becomes priced in way before that event ever happens. But you still want to be careful. And I think it's going to be on the 14th. Whatever Wednesday is going to be when we have that FOMC statement and that rate decision. So just make sure you're safe in the markets this week. I personally don't expect too much action ahead of that. I know I don't want to have a lot of money at risk or anything on the table going into that announcement. And I'm not just talking about dollar-based pairs. There is a ripple effect in the Forex market. So non-dollar crosses as well may be affected by whatever happens on Wednesday. The point is, you don't want to turn it into a gamble, meaning you don't want to be that trader that maybe had a few bad trades and you're like, okay, well, I know there's going to be big movement on Wednesday. I'm going to try and catch the move and make a quick buck to end the year. Trust me, you have a better chance at blowing your account and making your year worse. And for someone that may be getting greedy, you don't even want to put the chance of you blowing all your hard-earned gains for the year on this last week of trading. It's just ridiculous. So in my opinion, the best thing you can do is stay out, is sit back, watch it, have Bloomberg on or CNBC and have your charts up, pop some popcorn, just sit back and enjoy the show. I know that's what I'll be doing, but I know some of you are thinking about trying to trade it. And again, hey, if that's your decision, we're all grown, but I would recommend not doing so. I think the best thing you could do is have your money off the table where it's at no risk. But that's just my opinion. So thank you guys for joining me once again for another video. Do me a favor, continue to hit that like button. I know it takes a second, but it really does help this video out a lot. So hit that like button and please share this on social media. A lot of you guys follow me on Twitter. A lot of you guys follow me over on Facebook and Instagram. Again, it takes less than a minute. Go over and share that. Say, hey guys, awesome trading video. Check it out. Let me know what you learned from this video. That is great. I love hearing what you guys are taking from it. That way it helps me out with future topics and I know which ones we really need to hammer on and which ones you guys kind of get the point we can kind of push to the side. So thank you guys as always. Until next time, plan your trade your plan. Good luck in the markets this week. And again, be safe on the 14th. Happy Friday to you. It happened again. It happened again. I got one of those messages this morning, guys. I got one of those messages. Dear Akil, I blew my account again. Dear Akil, I blew my account again. Time to refund it and give it another try. I hate seeing those, but unfortunately, it's become a little numbing. It's become a little numbing, but it still hurts a little bit to see traders say that I blew my account. Time to refund and try again, and it's never, hey, I blew my account. I need to refocus and figure out what's wrong. It's never, hey, I blew my account. I need to take some time off and redo back testing. It's never, hey, I blew my account. It's time to sit back and get educated. It's always, I blew my account. I'm going to throw some money back into it. And I'm going to end up doing the same thing I did last time, right? Because it wasn't just I blew my account. It was I blew my account again, which means you've blown your account before, which means you will probably do it over and over again until something changes. What is it? What's it? Insanity? Is that the definition of insanity? Doing the same thing and expecting a different result? I hate seeing that. And I hate it even more because guess what? That was me. That was me. That was me. I used to consistently blow accounts, right? I was a CBA, right? Consistently blow account, or CAB, a cab, a consistent account blower. And we often fool ourselves to thinking we're doing something different, but we're not. How many of you guys have maybe not blown an account? And when I say blow account, maybe not completely broke, but you've lost so much that it was time to kind of quit for a little bit. How many of you guys have done that? Anybody? Me. And what do, right? We blow an account, we refund it, and the only thing we change is the strategy, right? We never change ourselves. This breakout strategy doesn't work, so I'm going to do moving averages this time. We blow an account using moving averages. We go to the internet, we watch all these movies, and okay, well, we're going to be a Gartley trader this time. We go and we trade Gartleys and we blow our account trading Gartleys. Man, Gartleys don't work. It's the system. All right, I'm gonna go and trade an inside bar strategy, right? Inside bar breakouts, and then we go and blow our account doing that. And it seems to us like we're doing something different. We think we're doing something different because we're changing the strategy. But in the bigger picture, right, we're doing the same thing. We're attempting to trade without really knowing how to trade. It's just packaged a little differently, right? Same gift, different package. And then we're met with the same result. And I used to flip out, right? I remember when I first talked to Jason Stapleton, he told me about an opportunity to take his training course. And, I'm pretty frugal. I don't really like spending money, but I can also accept when I need help. It's very hard. I'm stubborn, but I can. It takes me a while to accept it, but I can accept when I need help. So he's telling me about this course, and he's like, here's how much it costs, and that costs a lot of money, right? I was at the point where I was paying for graduate courses, and I'm like, well, I can take a graduate course for the same amount of money as this course costs. And one of the things that kind of pushed me over the edge of making the decision. I made the decision very quick. Once I got in a live room and see how he traded, saw how he operated, it was a done deal after that. But I was thinking about it this way. I'm like, man, do I really want to pay $4,000 for a training course? That's a massive bet on myself. I wasn't skeptic on it being a scam. I was fortunate enough not to fall for any scams. So I know a lot of traders that have fallen for scams, and for them, I would be 100%, skeptic of everything. But fortunately, I never invest. The only other investment I had made was, trading books, and me and my partner at the time, we had bought like a DVD, like a $50 DVD. So that was the amount of trading investment we did. So I never fell for any hey, double your account in a month with this $19.99 EA or something like that. I was just, stuff like that always seemed fishy, right? So it wasn't that I was afraid that he was going to scam me. Again, we had a good conversation. He wasn't pushy on sales, which is big for me. When people are pushy on sales, it kind of pushes me back. It's kind of like, hey, you're kind of pushy for a reason. This guy was, Jason was more like, hey, if you want to do it, here's the opportunity to get better. If not, it's okay, but come check it out. Real laid back. But I was thinking about the cost. Again, it was a big investment at the time. And one of the things that pushed me over the edge is I looked back at all the accounts I've blown, and I looked back and I'm like, man, I could have paid for this course a couple times. I could have bought it for some friends with the amount that I've blown in the market already. And I had to be honest with myself. I said, hey, if I keep going and doing what I'm doing, especially after we did our trader evaluation, I'm probably going to blow this same amount by the end of the year anyway. So I have two choices, right? I'm going to lose the money no matter what. Either way I look at it, I'm going to lose $4,000. The question is, am I going to lose $4,000 and learn something from it as far as like an investment in the education, which will potentially pay off in the future, or I guess which could potentially pay off in the future at the time? I didn't know, but, Or am I going to blow it in the market and learn absolutely nothing from it? And kind of that mindset is what made me shift it. But it's sad. It's sad because the amount of money people waste in the markets, yet they complain about paying for some type of education. They complain about, man, I got to pay $100 to be in a live room for a month, but have no problem blowing $100 on a trade. And it's just priorities. You got to get your priorities right. So I hate seeing it because it reminds me of myself. But that's not what you want to wake up in the morning doing. So anyway, enough of that. Let's get to some trading today. We got War Room in about 15 minutes. I'm excited for War Room. I had a talk with Charles this morning. Charles has hit kind of a